Have you ever wondered what separated successful traders from the rest? And that answer, my friend, is their ability to create a trading system that fits your individual personality. And that's exactly what we're going to be talking about in this video as I take you through how you as a trader can develop your own trading system. And this is whether you're a beginner trader or whether you're a seasoned trader, there's definitely some things that you can take away because as the saying goes, there's a million ways to make $1 million. And the best way to make your millions is to do it your own way in a way that fits you. So let's dive into the video and waste no time. Let's get right into it. So when it comes to developing your own trading system, the first thing you want to consider is your intention. What are your intentions with trading? You got to be clear. You got to be specific. You got to know what you're looking for in the market, but also what allows you to wake up day in and day out and put in the work. So intentions, you cannot hit a target you cannot see, and you cannot see a target you do not have. So it's important to have clear objective, know what you're reaching for. And this is not just for trading, this is for anything in life, because if you don't have goals, the likelihood of you achieving anything will, nothing happens by chance, nothing happens by luck. You got to put the work in and you got to know what you're aiming for. Know your personality. Are you someone who thinks critically and makes quick decision? Because as a trader, when you are creating your own trading system, you have to know who you are, because that's what's gonna make the difference. The people who succeed in the market, the profitable traders who do, and the ones who don't, what separates them is that they know themselves. And oftentimes in trading, what you hear most successful traders say is that your system is not the edge, you are, right? So it's important to know yourself. What's your personality? Do you make quick decisions? Are you slow with making decisions? What type of characteristics do you have? Patience. Are you able to adapt? Trading is all about adapting. So how do you handle stress, which is pretty significant as a trader because you're constantly dealing with stress. You're constantly in a position where you have to deal with uncertainty, right? Do you trust yourself and your thinking? All these things are things that you have to think about, because now when you're thinking, hey, what kind of trader should I be? Or the current trader that I am right now, is it a good fit for my personality? Which leads us to the type of trader that you are. The goal of a successful trader is to make the best trade. Money is secondary. That's a good quote. I like that. Put that in there. But when we're talking about type of trader that you are based on your personality and trading hours, which we're going to be getting into in the next little bit, you have scalper, you have day trader, you have swing trader, you have position trader. A scalper is someone who is going for 5, maybe 10 pips, 15 pips in and out very quick, which means that you got to be able to make quick decisions. You got to be able to live and die by your decisions. You see the market doing something, boom, you're able to strike. Act fast. Day trader, you're essentially coming into the market at a specific time of the day, whether it is the New York session from 8 a.m. or 7 a.m. to like 5 p.m. That's you're taking the bulk of your trade. You could be taking anywhere between 5 to 10 trades. And when the market closes, you're essentially done for that day. Swing trader, you're in the market maybe 3 to 5 times a week, depending on your trading strategy or depending on how many currency pair you're looking at. And you're mainly focused on the higher time frame, which is the 1 hour, the 4 hour, and the daily, the weekly. Those are swing trading time zones, right? Whereas day trader, scalper tend to be a little bit more in the lower time frame. They're either playing 15-minute, 5-minute, and even the 1 minute. You got position trader. Position trader, you're in the market on the higher time frame, the daily, the weekly, and the monthly. So we're taking a look at trading hours. For a lot of people who come to the market, you have your job, but more importantly, you have a lifestyle. It's important to pick a trading session that works well for your lifestyle. If you live in the Eastern time zone like I do, I live in Canada, Toronto, Eastern time zone. So the New York time is the ideal time for me to trade. I'm awake at that time. Whereas if I was trying to trade the London session, I would have to be up in the morning at 2 a.m. and looking to execute trades. So it just doesn't work well with my lifestyle. So when you're creating your trading plan, these are things that you have to know. So going over to the next thing, once you've identified the type of trader that you are, the time that you're going to be coming into the market, now you go over to the currency pair, right? What currency pair are you going to be taking a look at? what currency pair are you going to be trading? And my advice to a lot of traders, because when I first came into the market, I traded about 24 currency pairs and it was outrageous. Believe me when I say that more does not equal more. Less is actually more. So pick a currency pair that works with your time zone and your lifestyle, because if you're trading the New York session, which is 8 a.m. Eastern, you want to pick a currency pair that is paired with the dollar. And if you're trading Asian session, pick, a Japanese or Aussie. Like, those pairs are going to be moving during the Asian session. And the London, if you're trading the London session, pound, that is your go-to. Euro, those are your go-to. Choose 2 to 3 currency pairs and master them, right? Don't be like me, who traded 24 currency pair only to realize that less is more. So when it comes to your trading strategy, proper preparation prevents poor performance. Your trading strategy should allow you to establish a daily bias, whether you are a scalper, whether you are a swing trader or a day trader. You need to be able to come to the market and figure out who is in control in the market for that day. So you should have a method that allows you to do that. Higher time frame is best for this. Whether you're taking a look at the daily or the weekly, you need to figure out, hey, whose market am I coming into and who is in control of that market? The next thing is your trading strategy should cover your confluence, right? Support and resistance, supply and demand, highs and lows, whatever you're paying attention to, or indicators, whatever your specific strategy is. And this is how, like, your system also covers your strategy as well. So, like, in addition to figure out what type of trader that you are, the time, the currency pair, you need to have a specific strategy that you're using, which we're not going to be diving straight into this video because it would make it extremely long. So the next thing is you want to figure out your entry parameters and exit parameters, stop loss and take profits, and trade management as well. So all these things are important, like your entry parameters, your exit parameters. You need to figure it out. How are you getting involved in the trade? What are some of your confirmations that you're going to be using? Are you using fibs? Are you using candlestick formation? Right? Are you using support and resistance? Because you're going to be, if your trading strategy should cover your confluence, which is, essentially right here, right? Support and resistance, that is how you read the market. So how do you read the market? That's what I mean by that. And then finally, number 4 is your trade management. A lot of traders don't consider trade management, but trade management is important because in one of my previous videos, I talked about how it could be the major separator between you winning a trade and you losing a trade. More importantly, you even winning more consistently, because the market gives and the market takes, and you have to learn to take when the market gives. Next, so when it comes to risk management, the quote that I love, money moves from those who do not manage it to those who do. Risk management is one of the most important aspects of trading outside of your trading psychology. So it's important that you have within your trading system a specific guideline that you have to follow that is straightforward, that is clear, because if it is not clear, you will break it. Right? So have a risk management chart or position sizing guideline chart that you follow. You can risk percentage of your account, or you can choose specific lot sizes to follow based on your account size. So if you're trading one $10,000 account, one standard lot, you could say this is going to be it. And I'm going to use this until I get this account to 15,000 or 20,000, and then I will increase it to 2 standard lots. So you can kind of do it that way, see what works best for you. Because for me, I find that risk management is subjective. So I don't like to tell people, hey, this is exactly what you should do, because you have to find what works for you. And you might be riskier and crazier than I am. I don't recommend doing the most, because hey, you can blow your account in as a trader. There is no certainty. We deal in probabilities. All stages of my account growth, I must define my lot size before I get there. Don't increase lot sizes too quick to avoid large drawdowns. So that's if you're using the position sizing guideline, right? Which is essentially what I just talked about. Now, mixing your risk management with your psychology. After one loss, take some time to lower my heart rate and even walk away from the charts. Guys, this is important because it's very easy for your amygdala to get hijacked after multiple losses. So it's important to just get away or manage your emotional state so you can come back stronger. After 3 losses in a row, walk away. After 5 losses, turn off my computer for the day. So this is some things I implement. I would probably, right now, my max loss for the day is 3. After that, I know today is not my day. I'm going to come back tomorrow. So I don't wait till I get to 5 losses. So you have to decide what works best for you. Now, we've gone over that. Your trading system is not complete without a psychology plan, right? A lot of people talk about trading psychology, but they don't really prioritize it. Your psychology plan is not separate from your system, right? Your psychology plan has to be implemented in your system as well. And I'm going to give you just a slight overview of what your psychology plan could look like, or what it could be from a mindset perspective. So taking a look at this vision of the future, whatever I see in my mind, I manifest in reality. I always hold a vision of myself as a consistently profitable trader, and I live in that emotional state, right? And you gotta be before you become. If you don't see it here, it's not gonna happen outwardly. So my psychology plan, the process, continue to build self-respect and self-discipline for me by doing the following. Trading is a tough game mentally. And guys, if you're not coming prepared, you're not coming like a warrior, like it's gonna test you. And for a lot of you guys, you're going to break, right? And in order for you to not break in the heat of the moment, when you're in the battlefield, you're in the battleground, you got to really, really work on yourself. And, you know, one of the things I do is wake up at 5 a.m., meditate and visualize my future. I see it. You know, what am I looking to achieve? Before I became a full-time trader, before I made any money in trading, I did this. Exercise consistently to build discipline and confidence in myself, and also self-respect. So when I come to the market, my self-worth is not what's in line. My ego is in check. Analyze my trades, winners and losers right after they're closed, learn and move on. This is very difficult to do because sometimes when you take a losing trade, it's very painful. And the reason why analyzing it right after is because that's really where you learn. That's really where things start to pick up. So it's important to do that. I'll always use my heart rate monitor whenever I am trading, trust in myself and the vision God has shown me, never beat myself up after a loss. I just learn. So guys, this is essentially it. This is what it comes down to, right? If you want to create a profitable system for yourself, these are some of the steps that you can follow, right? These are some of the things that you can start to implement in your overall trading to get the results that you're looking for. I don't want to keep this video longer than this. Thank you for watching. Emmanuel from LiveFree FX. Hope you're out there living free. I will see you on the next video. Cheers.